Welcome to The Explainer, where we're digging into the massive surge in precious metals that's taking over the financial headlines. Gold and silver are on an absolute tear, and we're here to break down exactly what's going on. So, picture this. It's early 2026, and the price of gold has just obliterated all previous records, soaring past $4,700 an ounce. And we're not just talking about a new high. This is the kind of move that leaves even the most seasoned investors just speechless.
And get this, it's not just gold. Silver's right there with it, blasting past $95 an ounce. But here's the real kicker. On a percentage basis, it's actually leaving gold in the dust. So as you can imagine, this kind of explosive move has analysts scrambling, making predictions that are, frankly, beyond outlandish, as one expert put it. We're talking about the most bullish calls we've seen in more than 20 years. So is this just market hype, or is there something much, much deeper going on here?
Okay, so here's how we're going to tackle this. First, we'll get a handle on just how big this boom really is. Then, we'll uncover a pretty wild geopolitical trigger. After that, we'll look at the economic tinderbox that's fueling the fire. We'll also dig into why, specifically, gold and silver are the go-to assets right now. And finally, we'll ask the big question. What does this all mean for the system as a whole?
All right, first up, let's really wrap our heads around the scale of this thing, because this isn't just another rally. We are in completely uncharted territory here.
I mean, just look at this, a 75% jump in just 12 months. This is the sharpest one-year move we've seen under a U.S. president since the 1970s. This isn't a little bump. It's a massive, historic surge that's completely tearing up the record books.
Okay, so what in the world could trigger something like this? Well, the spark that lit this massive fire wasn't a market crash or an economic report. It was a geopolitical bombshell. You get a mad dash for safety. We're talking about a sudden, really intense standoff between the U.S. and some of its closest European allies, and it has sent the entire global financial system into a state of high alert.
So here's the flashpoint. President Trump demands that the U.S. acquire Greenland from Denmark. When that doesn't happen, he threatens some serious tariffs, 10% on 8 European nations, set to jump to 25% if the deal isn't made. We're talking major players here: Denmark, France, Germany, the UK. What's so wild is how this one pretty unexpected political move just spiraled into a massive economic conflict. It created this huge cloud of uncertainty, and that's what sent investors running for cover.
But here's the thing. That geopolitical spark landed on some incredibly dry tinder. The global economy was already in a tricky spot, dealing with inflation that just wouldn't quit and some big, confusing moves from central banks.
Okay, so to really get the economic pressure cooker we're in, you got to understand the CPI, the Consumer Price Index. It's basically the official scorecard for how much the cost of living is going up, inflation.
And wow, the numbers from the end of 2025 really tell a story. Overall inflation is stubbornly stuck at 2.7%, way over the Fed's 2% target. But dig into the details, and that's where it gets really painful. Your food bill, your rent, hospital services, and especially your energy costs, they're all climbing way, way faster.
Yeah, and this just drives that point home. We're not talking about the price of luxury goods going up. This is the stuff that hits every single household. Hospital services, energy, and, look at that, natural gas, up almost 11%. These are the essentials, and they're what's really squeezing people's budgets.
So you can see the dilemma this creates for the Federal Reserve, right? They're caught between a rock and a hard place. They're supposed to keep prices stable, but they're also supposed to keep people employed. Normally, with inflation this high, you'd slam on the brakes by raising interest rates. But if they do that, they risk stalling the whole economy and throwing people out of work.
And here's the twist. Despite that stubborn inflation, what has the Fed been doing? Cutting interest rates. They've already dropped them by 1.75%. That's a huge signal that they're more scared of a recession than they are of rising prices. And just to throw another wrench in the works, the Fed chair's term is up in May, so nobody has any idea what U.S. monetary policy is going to look like in a few months. Talk about uncertainty. Okay, let's recap. You've got a geopolitical crisis brewing, you've got inflation that won't go away, and you have a central bank that's acting, well, unpredictably. So what do you do if you're an investor? You run. You make a mad dash for what they call safe haven assets.
And for thousands of years, what have been the ultimate safe havens? Precious metals, gold and silver. They're real, physical things. They're not tied to any one government's promises or any single currency. So when things get shaky and people start losing faith in the system, that's where they go to protect their wealth.
But hold on, it's not just a gold story, not by a long shot. Look at these one-year returns. Platinum is up 150%. Gold 65% looks almost tame by comparison. But then there's silver, just exploding by 170%. That is absolutely staggering.
So what is going on with silver? Why is it outperforming everything? Well, it all comes down to its unique dual role. It's a monetary metal, a store of value just like gold, but it's also an absolutely critical industrial metal.
And that right there is the key difference. See, most gold just sits in a vault or becomes jewelry, but silver gets used. It is an essential, irreplaceable component in all the technologies that are shaping our future. We're talking AI and data centers, the entire clean energy transition with solar panels, the defense industry, batteries, electronics. The demand for physical silver is just off the charts, and that's creating a massive supply squeeze. It's like pouring rocket fuel on an already roaring fire.
So let's pull all these threads together. What's the big picture here? The key takeaway is that this isn't just a story about gold prices. This is a story about a perfect storm, where all these incredibly powerful global forces are colliding at the exact same moment.
Think about it. You've got the geopolitical shock from the US-Europe standoff creating massive uncertainty. You've got persistent inflation making everyday life more expensive and eroding the value of cash. And then you have central banks cutting rates anyway, which just adds fuel to the fire. It's this powerful three-part combo that has investors scrambling for the tangible safety of something real, something like gold and silver.
And that brings us to the final and maybe most important thought. Some experts, like Tom Bradshaw, are saying this isn't a sign of prosperity at all. Instead, it's an alarm bell, a warning that our whole system of fiat currency, the government-backed money in your wallet and your bank account, is under enormous pressure. So the question we're left with is this. Is this historic gold and silver rally just a market frenzy? Or is it a giant red flag about the very stability of our entire financial world?